Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management, and today we're talking about shorting. I'm not talking about shorting in the cake or being too short. I'm talking about an investment strategy that's used, which really makes the stock market very volatile. And you've seen the oil prices lately, how volatile they've been. Well, that's because short interest on oil is the highest it's been in 10 years. Chase, why don't you explain a little bit what shorting is?
Well, shorting it's really a crazy thing. You're selling something that you don't actually own.
So you gotta borrow it, right?
Yeah, you're borrowing it from another person and then you're selling that out. And then you have to do this on what is called margin. And margin is very, very risky as well because there's items called margin calls where if you don't meet the requirements in the account, you're gonna have to cover those shorts. So overall, it's just a very risky thing. And we definitely stay away from shorting because we think when oil turns around, all those people shorting it, I think it's now at about 12% of float. Those people are going to have to cover those shorts and we're going to see prices go back up.
And what happens with shorting is that because we're short of it, they've got to step in and buy it. And as they step in and buy it, all the other shorts like, oh, it's going up, they start doing it. So it's very volatile. It's very crazy to do shorting. So that's what a short is.
Yeah, and as we know, investing is an emotional game, and shorting, you're even more at risk. So you're going to be even more emotional when you see the prices change.
And let me also tell you, this is the traders. These are not the investors that hold investments in companies. These are traders that are trying to make a quick buck on it, and by shorting, they're the ones causing all the volatility. You can short a commodity like oil. Also, the same thing happens in stocks, so be careful about shorting stocks. Next thing I want to talk about is Amazon. Now, why am I talking about Amazon? Well, Amazon did something very crazy. They announced, sounds good, a stock buyback. But explain to us what they actually did, which is kind of crazy.
So they announced a $5 billion stock buyback.
Wow.
That sounds great,
Yeah.
right? Well, get this. In 2010, they announced a $2 billion stock buyback. They still have $750 million remaining on that stock buyback 6 years later. That is, well, thanks for the $5 billion stock buyback, but are you actually going to go through with it?
You know, and I'm glad you bring it up because a lot of times companies, they announce a stock buyback. That is not a guarantee that they're actually going to buy the stock back. So when they announce it, the stock generally goes up, but it could be false promises.
Yes.
All right, and that's what we call Amazon is a buyback hype. They may not do it, but the stock, I believe, went up because of it, didn't it?
It was about 2% today, yeah.
Okay, let's talk about one more thing about the job market. Now we keep hearing, oh my gosh, we're so afraid the economy is going to recession. Well, it's not going to recession. We've never had a recession with a strong job market.
And why is that? If people are working, making money, are they going to go out and spend that money, or are they not going to spend that money? I think they're going to go out and spend the money.
More money in the pocket. Hey, we can go to the movies now. We can go to dinner now. So it does work. Also, too, why are we saying this? Jobless claims come out once a week. Last week, 285,000. This week, they fell to 268,000. A very, very good report.
Yeah, we're just seeing great things in the job market. I don't see anything wrong with the economy going forward, and I just think it's craziness right now.
And actually, that's the lowest job report, jobless claims, since mid-December. So things looking pretty positive there. Do not worry about a recession. It's not happening. This is the time to step in and buy good quality companies with strong fundamentals and wait the storm out because, again, I can't tell you the market's going to go up tomorrow, but if you buy those good quality companies, they will do very well over the longer period of time. So now, look for those good companies.
Exactly.
All right, well, if you have any other questions, feel free to contact us. Go to our website, smartinvesting2000.com, or give us a call, 858-546-4306. I'm Brent Wilsey. Have a great day. We'll talk more tomorrow.